Hi everyone. Today let's talk about inflation coming back much higher than expected. Then we'll get into all the usual data and charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So inflation came back hot. We kind of talked about it yesterday. I thought the expectations were a little bit too optimistic, and as a result, they did come back better than expected, and markets were too optimistic. All of the points that we talked about yesterday ended up coming true, and then we did get a very sharp drop in the markets. You can see the month-over-month number stepped up to 0.3. That was not great. And then you can see the year-over-year numbers, flat on the core number. We still stepped down on the headline to 0.31. But the expectation there yesterday was 2.9, so it still ended up 0.2 higher than the expectation, and you can see that here. 2.9 was the expectation, so definitely not what you wanted to see from inflation. It just seemed really optimistic. You can see the previous read here was 3.4 in December, and then we were expecting a drop all the way down to 2.9. I just didn't think that that was going to happen. We'd seen some pretty sharp drops here going back to May into June, but then we've been basically flat from that level. We saw a 3% number in June. We're back to 3.1 here, so we've been flat over the last several months. Not sure why markets expected such a significant drop on this CPI reading. Just seemed unrealistic and it didn't happen. And as a result of that, we did get a pretty sharp move. Now it's going to be interesting to see how the Federal Reserve reacts to that. And speaking of the Federal Reserve, let's take a quick look at the Fed futures. You can see it's basically a lock that we're going to stay paused here at current levels for the March meeting. We were at 86, stepped up to 93. And then looking at the May numbers here, you can see previous read for a pause was 44.9, and that stepped all the way up to 63. And let's go out to June here for a pause, still at 29%. So markets are still expecting at least one cut by June, most likely at the June meeting as the earliest cut. I've been saying this for a while. I thought June was the earliest we would see a cut, and now markets are starting to price that in, which is part of the reason they're falling, in my opinion. You can see the previous read here for a cut was 45% for one step down, and that stepped up to 50%. For some reason, there was a 42% chance of a 50 basis point cut in June. That has dropped all the way down to 19%. That should really be 0%. I just couldn't imagine a world where that's going to happen. And you can see the previous week's read was 51% on that. So markets were just way too optimistic, and now that's being priced out of the markets. Moving over to the Fear and Greed Index, you can see we stepped down to 69. Pretty substantial step down. 77 was the previous read. We were in extreme greed. We stepped down to regular greed. Let's look at the individuals here. So market momentum still in greed, even with the big step down. Stock price strength, still greed. Breadth, still greed. Put call ratio, we did see a little bit of a step up here. We'll look at that later, but that is now in greed. And then you can see market volatility, massive spike higher. This chart is indicating around a 15.8. We'll look at that on the charts later as well. And then safe haven demand as well as junk bond demand still in those extreme greed readings. So honestly, these are better than I would have expected with the weakness that we saw across markets. I know we've been on a colossal run, so this little pullback today doesn't feel like much, but I do feel like this is a bit of a shift in the thesis for markets. We'll see if there's any follow through going forward. Moving over to seasonality just for a moment, we are in the period of flatness here for the rest of the markets. You can see the 13th up until the end of the month, basically in that same range, maybe a slight gain here for the NASDAQ. Russell, similar thesis here at about 1.4, finishes right around 1.4, supposed to be flat. Obviously, we've seen massive sell-offs from the peaks, so we'll see if we can flatten out for the rest of the month. And then looking at the S&Ps and the Dow, supposed to be flat up until about the 22nd, 23rd timeframe, and then sell off into the end of the month. It almost seems like the solid lines is what we're going to end up getting, and that we've actually pulled forward this rally at this point. So if the solid lines are more indicative of markets, and we've already peaked out here, then the rest of the month would be taper. So if the 16th was pulled forward to the 12th prior to that CPI read, that could be interesting. And then you're looking for weakness into the rest of the month. and that would look like a step down of around 2 to 2.5%, which is what we already got today. So the question is, will we see more weakness through the rest of the month? And moving over to the other seasonality chart, remember, after options expiration is when we see statistically much more bearishness from the 20th to the 23rd. So we're not even into that period yet. Options expiration being the 16th, and then weakness, and then more weakness is supposed to come through after that week. Moving over to earnings, Coke met on the bottom line, beat on revenues. Airbnb missing on earnings by a lot, pretty interesting. Marriott beat on the bottom line, missed on the top. Pretty solid beat there, 3.57 versus 2.12. Pretty solid beat there. Missed on the top line though, kind of interesting. Gaining efficiency but losing a little bit of revenue. And then looking at tomorrow, you got Cisco, Occidental Petroleum, Kraft Heinz, one of those staples worth watching. Global Payments in the morning as well, fairly interesting. Not much left here in this earnings cycle. And then moving over to the economic calendar, you can see those CPI numbers higher than expectations, not great. I forgot to mention that the core number was expected to be 3.7, so we were not expecting a flat line from the previous read. It was much higher than expectations on the core number as well, 0.2% higher, similar to the headline number, 0.2% higher. So everything across the board was higher than expectations, and that's why the market sank so heavily. And then looking at tomorrow, nothing major on the calendar. And then looking at Thursday, don't forget, if you hold anything into the close, they could be affected by these core retail sales numbers. And then you have the retail sales month over month numbers as well. So one more big data release for this week. Moving over to max pain, you can see we're down to 494.68, significantly closer to that 480 number. Call walls here at 490 and 495. So we're below that first call wall. We talked about that potentially happening. Does make sense to get below 490 as well. That would be about another 1% move. And then between 480 and 490 makes sense for a finish at this point. Doesn't seem like we're going to get that same bullish finish at the top of the puts that we've been seeing. Total options, just over 4 million, put call ratio right in that same range. So this looks much more bearish now and could potentially close below that 490 level, closer to that max pain at 480. Moving over to the charts, starting off with the SPY here, you can see we started to fall yesterday and that trend basically continued straight down here. Ended up bottoming out around my level here, 491.50. Touched that level, bounced a little bit right up to the 9 EMA, and it's starting to sell off here now on the hourly chart. Did see a strong bounce in volume and buying on that last candle of the day. Not super unusual. But on the shorter time frame, this is still a bear trend now. So we're well below the 21 EMA, 21 crossed below the 55. You're below the 144 as well. They're not quite in order yet, but this does look weaker on the shorter time frames. And then looking at the daily chart, you can see we threw a wick to that trend line, gap down, and dojied. So we actually kind of hung in there pretty well, considering volume, obviously super bearish, momentum stepping down significantly. But the question is here, does this trend line hold? We didn't quite touch it, down at 489.70. That would be the level for tomorrow, maybe 490, right in that same range. But we have a level, 491.50, and then the trend at 490. So that gives you a little bit of something to work off of. Obviously, short-term downtrend. The question is, do we see a bounce, double top, potentially a lower high, maybe at that 500 level? Or does it just continue straight down tomorrow? If we start to see these levels break in here and that trend line breaks, that could be a significant change. If that happens, then your next trend line is down around 482, which is significantly closer to that max pain that we just talked about. Moving over to the NASDAQ here, similar thesis. You can see we were falling throughout the session, quite a bit more choppy. Found a bottom at 427, bounced to the 21 EMA, broke to a new low here at 425.76, and then bounced into the end of day, starting to fall again after hours. So the 55 EMA seems to be that resistance at 429.71 in terms of dynamic resistance. This is the 15-minute chart, so let's jump to the hour. And you can see why we did get that initial bounce at that 200 SMA. Still holding that. If that breaks tomorrow, that's going to be quite bearish. I do have a level there at 428.50. So looking for that to break potentially tomorrow. Momentum and RSI still bearish. You can see we're getting a little bit of an upswing on the hourly momentum, but not super convincing yet. Again, that 21 EMA sitting up at 431 as resistance. And then you can see the cross here between the 55 and the 21 as well on the hourly chart. So pretty significantly bearish there. And then looking at the hourly chart, similar to the SPY, big gap down, took out the trend line. It is holding at that 428.50, just like we saw. I would expect that to break, hit that 21 EMA tomorrow. Momentum bearish, RSI bearish. You can see that divergence here. Previous high on RSI was at 25 January. Then we went to a much higher high on a lower RSI read, and now we're breaking down. So definitely some divergence, definitely some weakness, and you have the catalyst of that higher number on inflation. It seems like we're due for that correction that we've been waiting for. It's been about 4 straight months of bullish price action. Seems like it's time. Moving over to the Russell and the Dow, they both cratered on the day as you would expect. The Russell was down 4.1%, massive move down right after 3 super strong legs. I guess that was just driving to generate some selling pressure, and then as soon as the news broke, massive selling as you would expect. Hit that 55 EMA at 193.23, took out my level at 195.15, so I did roll down and in. So back into that similar position that I was in prior to the roll up. In terms of levels, I'm watching 191.89 right here at these previous lows. Critical point there for me. If that level breaks, I'm going to be out of that share position. So 191.89 critical point. I did get tripped on that this last move down and then ended up having to rebuy back into that position. So that was a little bit annoying. So critical point there for me, 191.89. Still holding above it, up a little bit after hours. Let's look at that on the hourly chart. Similar to everything else, caught a little bit of a bid into the end of the session. We'll see if that follows through or not. And then looking at the Dow, 1.36%, hit that 21 EMA on the daily chart, hit the VWAP as well. Momentum bearish, RSI bearish, volume stepping up massive on that down move. And then looking at that on the hourly chart just for a moment, similar to everything else, sold off throughout the session. Lower low on that second low, got back above 182.20, right at the 9 EMA. I would expect this to sell tomorrow as well. Momentum says maybe a slight push up to 184.50-ish. And then look for that bigger breakdown tomorrow. Moving over to Apple and Tesla. Apple was down 1.13%. Pretty significant gap down, fell. It was already falling yesterday, but it hit this trend line, hit the 144 EMA and bounced and ended up holding that level, which is interesting. Momentum still bearish, RSI still bearish. So realistically, I would expect this to hit this lower trend line around 181.40 or so. We do have a level here at 182.37 as well. I would expect this to break, like I mentioned, back into these previous zones. Then we'll see what happens from there. And then looking at Tesla, Tesla actually held up really well. This is the 4-hour chart. It did sell on the day, but it hit this highly traded zone, going back to the same low here from 25 January and ended up holding that level. So this has been holding up quite well. Like I said, I think there's a little bit of opportunity here in Tesla. Had the big gap down and it's been consolidating, coiling. Momentum stepped to bearish here on the daily chart, so that's not super great. It was down 2.18%, but that's better than I would have expected given the market conditions. Moving over to Microsoft and NVIDIA. NVIDIA was down only 0.17%, Microsoft down 2.15%. You can see Microsoft on the daily chart, big gap down, hit that 21 EMA, hit the trend line. We'll see if it holds here. If it doesn't, my next level is 394.20. Obviously still very much an uptrend, but momentum bearish, RSI bearish, and you can see that RSI breakdown, retested the SMA and sold off, so that does look quite weak. Clear divergence from these previous peaks on RSI. And then NVIDIA, like I mentioned, held up extremely well. It did gap down quite a bit to begin with, down to that 700 level, tagged that level just for a moment, and then rallied right back, almost to the close from yesterday's session, and it is up after hours. The stock is just relentless. It can't be beaten down. It did get below this trend line just for a moment, and it is right there now. At this point, you would expect it to break higher. NVIDIA just seems relentless, and there's not enough sellers in the world to sell this stock. Moving over to staples and discretionaries. Staples was down 1.07, discretionaries 1.99, so staples still holding up a little bit better, but we're back below this trend line. This looks a little bit bearish now. So this looks like a little bit of a weak left shoulder head, potentially right shoulder forming. We'll see what happens. Momentum's bearish, RSI looks bearish. Seems like markets are just moving into more bearishness overall, and even staples is starting to sell off, like I mentioned. Highly traded zone around 72.30. I have a level at 72.50. We'll see if those hold. We did test it here today and it bounced a little bit, and then discretionaries tested that level yesterday. Couldn't get above it at 180.10. Did test it on Friday as well, and then now we got the big gap down back into the middle of this range, back at these highs from 11 January. Didn't quite hit my next level at 174.76, and we're stuck between the 21 and the 9 EMAs, momentum bearish, volume stepping up on that selling pressure, so it looks much weaker than it did over the last week. Moving over to transports and industrials, we've been watching these sectors for a while, and sure enough, they sold off just like everything else. You can see that divergence. Peak RSI was back here on 14 December, dipped a little bit lower, got a much higher high at the trend line on 9 February, and now we're back below the SMA, momentum slightly bearish. Tested this level 267.18 after the gap down, held that a little bit. Now we'll see if that can hold in tomorrow's session. Trend line sitting at 265.13. Realistically, I would expect it to continue to break down. You can see these previous wick highs, that could be some potential support as well, but I just think the thesis overall is changing. And then looking at industrials, same thesis. Had peaks, lower RSI numbers, momentum breaking down. RSI broke below the SMA on strong volume. Got below 116, next support for me, 114.50. Moving over to breadth, as you would suspect, both of these broke down really significantly. You can see we hit that 55 EMA yesterday, and sure enough, we got the rejection from that point right on time. Wicked all the way down into this 37, 38 area. Didn't quite get to the 36.60. I would expect that to happen tomorrow. Realistically, I expect this to break much lower than that, potentially all the way down into the 16 area on the 20-day breadth. 50-day breadth, similar thesis. Got back below 62.25, broke that. Got all the way below 52.80. So that is a new, much lower low than we've been seeing. Next level for me, down around that 40 level, you can see that is a critical level, marks multiple tops and bottoms. Then we'll see what happens there. Momentum, bearish, RSI, bearish. Moving over to yields, as you would suspect, we got a massive leg higher on both of these. Let's go ahead and extend out these trend lines. You can see, obviously, we broke those significantly, almost to the 200 SMA, sitting at 4.71. But look at that leg, 4% higher on the yield, and it's up even more on the Wednesday candle. Similarly here on the 10-year, got back above all the EMAs and SMAs, got back above the trend. Next level here, 4.35, and then my next trend resistance, 4.4. It does seem like it's going to continue higher going into tomorrow's session. Moving over to the dollar, did exactly what you would expect. Continued to hold that 200 SMA on the hourly chart, continued to hold that 144 and 9 EMAs on the daily chart, and then with the big CPI number, you got a massive leg higher, 0.7, took out this level, took out the previous highs, trend resistance up around 1.52, next horizontal resistance 105.50, momentum bullish, RSI bullish. It seems like the dollar is set to go higher off of this data. Moving over to bonds, again, they did exactly what you would expect. I've been talking about this for a while. TLT looked very weak to me. I thought yields were going higher, and sure enough, they have. And then you got the big gap down and sell, and it's closed on its lows, well below my 92.82 level. So next for me, 89.16. Similarly on J&K, gap down in Doji, below my short-term support. Did hold 93.67, so that's a little bit interesting, but momentum bearish, RSI bearish. This looks very weak to me going into tomorrow's session. I think yields are going higher. I think markets are going lower. And with that, so should bonds. Moving over to the VIX here on the daily chart, you can see that massive spike that we got. Obviously expected with markets going so much lower so strongly. Spiked all the way into my targets around that 1650 area. That's what we expected based on this trend here. It ended up overthrowing that massively. Got all the way up to this trend line at 1750. I didn't think we'd see that. I thought we'd get kind of stopped out at these levels. But now we've hit this high point. You would expect this to continue higher. The next target here would be 1850, and then above that I do have a 20 marker. Seems like this is set to go higher. Similar to what we saw here, consolidation, you see spikes getting up into that 20-25 range, getting up into that 2250 range, which could indicate some pretty significant down moves over the next few weeks. Moving over to my accounts, obviously I took a pretty decent hit, down 1.1% or $1,100 on the day, back down to $3,000 profit on the year. And looking at my positions, you can see I rolled back in on that covered call here for the IWM. As it sold off, I rolled down. You can see I did it at a time a little bit before that slight jump that we saw into the end of the session. I'm not nervous about that at all. Like I said, I think we're going to see a little bit more downside pressure, and this does give me a little bit of upside potential. My max profit to the upside would be $199.35, which I think is quite optimistic for the next 45 days. I think we're going to see lower prices. Like I mentioned, 192 is that critical area for me on the IWM. If it breaks below that, I'll be taking off that share position. and continuing to hold these calls. And then looking at the TQQs, I rolled in that covered call I had to 56 for this Friday session. I'd like to get executed on that. I'd like to let those shares go at this point. And then I did sell a put a little bit early in the day. I could have got a better price on it, but it's at 54.50 for next week's expiration for $1.45 on the TQQs. So trying to reestablish that position. We'll see how that goes. Like I said, I'd like to let these shares go at 56 and then reestablish at 54.50. And then looking at my main position here, I did roll it down and into $53 for 38 days from now. I did not do that at the best time. We saw a little bit of a jump into the end of the session. I'm not super concerned about that. You can see it was for $5.37 credit, so that puts my max profit here at $58.37, which would give me about another $1.50 or so on this position for upside over the next 5 weeks. And that gives me protection down to 48 or so. And then you have that additional loss in there that'll come through as well. Right now, pretty comfortable with this, not trying to capture all of the upside. If these shares go at 53 for that $5 credit, I would be comfortable with that. I'm not trying to capture every little bit of upside. I do play a little bit more conservatively, and I do think there's more risk to the downside than there is opportunity to the upside. Let me know down in the comment section what you think of the CPI data. Where do you think markets are going next? And is this a change of trend or a short-term pullback? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.